Welcome back to Finding Perfect Property, Diary of a Buying Agent. I'm delighted to have with me today Stephen Moroukian from Barclays Private Bank on the podcast. Stephen is Product and Proposition Director in the Real Estate Financing, Private Bank and Wealth Management Division, and he's worked at Barclays for almost 20 years. In his role, he's responsible for the delivery of mortgage finance across the Barclays private banking platform. Stephen, welcome to the podcast.
Hi, Camilla. Thank you.
Thank you so much.
Great to be here.
Great to have you on. I always love to sort of start my podcast just asking my guests a little bit about their background. And you started your career working at Alexander Hall. In fact, we were both on the same sales floor back in the day. I was at Foxtons, and Alexander Hall, for those listeners that don't know, is the mortgage broking business part of Foxtons. And that was all the way back in 2005, if you can remember that far back. How was your experience working at the sharp end?
Yeah, well, it was fun in a lot of ways. I think what's really reflective over the years is that lots of people that I worked with, including yourself, are still in the industry today and doing all sorts of varied jobs, and that means that there's a great connectivity to that community like this, which is brilliant, I think. And I say to a lot of folks who join this industry at an early career stage that there is the opportunity to build those networks, and it's difficult to think about 10, 20, 30 years time that you'll still be talking to these people. But of course, that gives you market insight. And yeah, it was interesting in a lot of ways, insofar that I think property it's obviously very emotive for everybody involved in the transaction. It's clearly the most expensive transaction that anybody will undertake, regardless of where that is on the wealth spectrum. So by definition, that means that there are other tensions that exist, and there's all sorts of deadlines. So through all of that, I think it teaches you a very complex journey, but at the same time, how to manage expectations, how to work within those particular journeys, which can all be fraught with challenges, but obviously a lot of fun.
Yeah, a lot of fun. And it's it's a brilliant training ground. Whilst Alexander Hall's separate business to Foxtons, we were sort of all together under the same roof. And, from my perspective, I don't think I would be here today had I not started my journey at Foxtons. And when young people come and ask me, how do I become a buying agent? I always say, learn your trade first, go work for a big agency and build your network. So it was good fun back in those days. So obviously, Alexander Hall's big mortgage broking business, dealing with volume, dealing with lots and lots of clients. So what then sort of led you into the private banking world?
Well, really good question. It was actually the international bank, which is subtly different, but it was part of a broader business, which at the time was called Barclays Wealth, and today is Private Bank and Wealth Management. And for me, it was the opportunity to work in a much more diverse business. And even today, Barclays Private Bank and Wealth Management is across just under 30 locations globally. For me, I wanted to work with international clients. I also wanted to work in a large organization, and I wanted the opportunity to lead teams and also be involved in a specialism, a niche. And when I felt the time was right and the opportunities aligned, 20 years has nearly flown by, which is unbelievable.
Amazing. That's quite amazing. 20 years, it's impressive. What do you think it is specifically about Barclays that has kept you there for such a long time? And how's your role, evolved over 20 years?
Yeah, okay, really big question. Might be a long answer. But for me, lots of things. I think the first thing is the people. I'm very privileged that I work with so many great folks and have done over the years. Everybody's very open to share their experiences and capabilities. Everybody's role is, of course, slightly different, which means there's the opportunity to learn. There's also quite complex journeys that we're all working on and transactions. And so that deep specialism on a particular asset class or maybe a particular location or a particular jurisdiction, cultural nuances, all of that sort of stuff, you've got the ability to leverage that capability internally as a colleague. And I think that's great, not only for me as a colleague, but actually for our clients. Also, I think our offering is really powerful at the moment. Barclays it's a huge business. And I think folks who have never worked in a large organization maybe think that it's quite rigid and firm, but actually what happens is that there's a lot of variety in the role. And I think for me, I can say clearly that I think I've probably had a different type of role every 3-4 years, something like that. It's definitely felt very different. And that's been a lot of fun, but that also means that you're constantly learning. Big organizations are organic, they change all the time. So you have to keep up with that change. If you think of all the things that have happened, whether it was COVID, Brexit, global financial crisis, interest rates up, interest rates down.
Change of leadership.
Wow, all of those sort of things you have to just readjust to. And markets that we're in, markets that we're out of. So it means regulation change. That's been a big one for me. As lots of mortgage regulation change has happened over the last 10 years. All of that has meant that myself and my team have had to react to those things.
Keep you on your toes.
Yeah.
Will we still be here in 20 years' time?
Quite possibly.
I want to talk about your current role at the bank and what does a typical day look like for Stephen Moroukian inside Barclays?
Okay. I think without sounding like a cliche, perhaps a typical day is quite varied. Lots of things. So my role today, I think, is a great role. I love my job. I'm quite privileged to steward the real estate product and proposition for the private bank. That means wherever we lend money to our clients who are looking to secure that against a property, it's myself and my team that oversee things like the pricing, the proposition that we offer to market, some of the thought leadership that we do, our offering, our internal appetite, and bring all of that together. Obviously, there's loads of other stakeholders that are involved in making that happen. And it's important that we work in the right way to do that. And of course, our different markets is what, for me, is a really powerful offering. And what I mean by that is if I think of all the locations that we do that, it's not just London, it's the whole of the UK. Obviously, Barclays is a British bank headquartered in London, and therefore we've got national reach. But also some of the other locations, which of course you're very familiar with, that we operate in. Jersey, Guernsey and the Isle of Man, the Crown dependency is very important to us. But also properties in the French Riviera, Monaco, parts of Paris, Switzerland, all sorts of locations. What that means is that we're quite privileged to see our clients in different locations.
Yeah.
And at the moment, that's really important because our clients are making decisions based on multi-location strategies. So, for example, Jersey's been very popular. Monaco's been very popular. We saw that during the pandemic for all sorts of obvious reasons. And that's become even more popular recently in terms of where clients are thinking about basing themselves.
So one day, in the space of a day, you might be helping a client with a mortgage in Monaco, to a mortgage for a house in Jersey, to financing something in the Swiss Alps.
Yeah, and what's really important about our structure, which I think is, number one, I'm very proud of, and number two, I think is compelling in the marketplace, is that we have local distribution teams. So that means if you're buying in London, you get to see somebody in London. The decision is made in London. And that allows us to have access to local expertise like yourself. And we do that in every location that we offer real estate financing. So if you're in Monaco, you have the same. If you are in Jersey, you have the same. Yeah. And I think that's really compelling because it means you are effectively on the ground, meeting local people, and you're dealing with people who understand that market. In many instances, many people within our team have been either with the organisation or have worked in the industry on that particular asset class 20, even 30 years. So you're dealing with true professionalism.
Yeah, I think having teams on the ground is really important, and hopefully means that you can be quite quick, because speed, we'll talk about the market in a bit, but, if a client finds an amazing property and has managed to get that deal agreed at a very attractive price, they need to move quickly. How quickly can you and your team turn things around?
Yeah, it's a really good point. And I was thinking about this only this week. When you think about some of the nuances that come up, having that experience capability means that we can move quite fast around that. So what I mean by that is that we are not fazed by some of the more nuanced, I don't want to say problems, but I guess characteristics that come along with a property transaction, which might relate to a parking space. It might relate to something within the management, the management team's contract. It might be a lease issue that just needs a bit of wrangling. There are loads of things that come up as part of that transaction. And if you are somebody who's not necessarily based in the UK, from the UK, or has bought a property in the UK before, it can be maybe a bit challenging emotionally. It can create a bit of uncertainty. And for us, based on the basis that we're here, on the basis that we've got that deep expertise, we're able to handhold our clients through those challenges and really be able to provide that expert advice. So I've not answered your question, which is how long can it take? But it really varies from client to client. And a lot of that actually is based on their desire to transact. So how quickly, or in some instances slowly, do they want to go because they've got other things going on? So we pair our capability and our speed against that. And that means that we can turn things around very quickly. Of course, we're here, so we can do that. We work very closely with our internal partners, and we can do that sort of stuff intraday. It doesn't mean we're waiting overnight or anything like that. But also, if a client wants to engage early, this is what I'm thinking about. In fact, before I went on holiday, I had a long conversation with a client that has been with us for a very long time and wanted, some options around what they want to do. Really complex set of criteria. There's no answer as yet. There's just ideas, and those ideas at some point will formulate into an execution plan. But that needs to happen or start happening in September, October. But great time over summer to sit down and have that conversation. And I think that's where we add real value.
How does Barclays approach private banking for high net worth clients?
Oh, wow. Okay, big question. So obviously we're a private bank, which means we're not just a lender. We do a whole host of other things. In fact, our most recent investment disclosure, or the one that we did in December last year, placed our client assets and liabilities at around 180 billion or just a bit more. So that's huge if you think about deposits, banking, investments, FX trades, lending. They're the core products. So from our perspective, that means our clients are doing all sorts of things with us all the time. And a lot of those things will be part of a journey. So there may be a conversation about banking today, which may become a conversation about lending tomorrow, or vice versa, or investing in the future. So our clients tend to come to us on the property financing side on what I call a 3 strategy perspective, which is trading in, so acquiring property, refinancing, or diversification. So I've got the property and actually now I want to do something a little bit differently. So all of that means that the holistic capability that we have allows us to do that. I've already given you a sense of the scale, but we have just under 30 different offices, both nationally and internationally, that we work with, some of which you know well. And all of that from the Middle East, Asia, all across the UK, Crown dependencies. So that gives us that connectivity to work with our clients on a holistic basis.
Obviously, the mortgage space, the lending space, is pretty competitive. Lots of private banks will lend on UK property and international property. In your view, what sets the Barclays mortgage propositions team apart from your competitors out there?
Yeah, okay. Well, I think definitely what I've already said around our capability and expertise when we transact locally. I think that's a really big one. I also think that we have great cultural nuance in the way that we deal with our clients. So because wealth management as an industry is really exciting for a lot of reasons. It's one of those few industries that it just continues to grow in terms of global wealth. But it's not concentrated in any one place. It is really varied. So as a result, it's very difficult to scale. And therefore, you need talent that is able to face off to clients who are either geographically located or have a certain cultural disposition around the types of properties that they're buying and the sort of things that they're looking at, or the way that they want to transact. All of that means that you need top talent, and I think we're a great organisation at having that and at the right places at the right time. And so all of those things are really important. In terms of the mortgage proposition, I'm really proud that we have a DNA for doing this type of offering and solution. Certainly the 20 years I've been there, but of course, Barclays is a 300-year plus institution, so there's great muscle memory in doing all of those things and doing it well. And I think that's what clients look for, which is the credibility and track record to have weathered many storms, which we have, to have been there and present when clients need us, and to be a consistent deliverer of something compelling, which I think we do. I think we're very, of course I would say this, but I think we're very, I think our appetite's very strong. We're a big balance sheet lender. We've got good presence in the market. We've got very good market share. It can be a bit difficult to work that out, but based on what we see consistently, we're present in a very, what I would call very good percentage of transactions that happen in London and elsewhere. And I think we market ourselves very well. We look to meet with clients, even if they are just talking about what they want to do. So they may not even be clients of the bank, but they're prospects, and they want to understand what the market does and what the market's doing and what that might mean for their decision-making process. And I think the last one for me is one that internally we call One Barclays. And this is a really, really important factor. And one of the reasons why I'm very proud of the institution I work for. But we are a huge organisation, around 100,000 people and globally based. But the businesses are very different within Barclays, and they all complement each other. And so the private bank and wealth management business stands alone, but it also stands shoulder to shoulder with the corporate and investment bank, the business bank in the UK, and the UK retail bank, and the cards business, Barclay Card, both internationally and nationally. But what that means is we have a lot of opportunity to collaborate, both with each other, and that means it's not uncommon for somebody to come to me from one of those businesses and say, I have a client who I deal with on this basis, but the underlying individual or one of the owners or whatever it might be is looking to buy a property in London. We think that's one for you, and we help and support. It might be just to give them information about the market. And the last thing is that as part of that, it works the other way around. So when our clients want access to perhaps a bit of market information or something that's relevant for a certain industry, we're able to connect those dots. So I think it's really powerful.
So for a lot of our clients, when they're asking us for introductions to banks for lending, they're not necessarily looking on day one to invest money. They just want the mortgage. That's what they're focused on. So are you a bank that will do what's known as dry lending in the trade?
So lots of our clients have got assets with us, and we serve a lot of those clients through our lending proposition. But of course, from time to time, depending on where they are on that journey, they might need that liquidity today. When we work with the right clients who have got a good understanding of that journey that they're looking at, and we've got a good understanding of what they're looking for, and then we can facilitate those types of transactions. At the same time, it's critical that we spend the time with our clients to understand that and work with them on a kind of full disclosure basis.
I think the other thing that clients are really interested in when they're just focused on buying the property, perhaps they're shopping around, or they've got a mortgage broker that's looking after them and shopping around. Where do you think Barclays sits in terms of pricing at the moment? How competitive are you?
Well, so I would of course say I think we're very competitive, and I genuinely do. So my team look at our returns, but also the marketplace, and we try to ensure that we have a compelling offering as a UK private bank headquartered in London. I think it's important that we do that. Where we have clients who have relationships with us or are growing relationships with us, then there are other considerations that we can think about in terms of pricing. So in private banking, there isn't just a sticker price, if you like, and that's it. There are other ways of us pricing transactions, and that involves working with our clients or their advisors in a lot of detail, trying to understand the size of the relationship that is with us, could be with us, could grow over time, and being able to price accordingly.
Interesting. And I think the third thing also that is important to some clients is how much they can borrow. What's that sort of percentage looking like these days?
So it's a tricky question. There's a couple of answers. I think the first is clients will always traditionally want to borrow as much as they can. Barclays Private Bank, I think we are very compelling in that space. I think we're compelling in that space because we understand the asset class. We have a very good track record of managing the right types of transactions, and I generally find that our lending terms tend to be well within market appetite. And really anything outside of that is probably not something that we would do.
Fair enough. Gone are the days of 100% loans, is that right? Or do they still exist?
They don't exist in private banking, but it's a really interesting point,
Yeah.
because one of the product innovations that exist in private bank mortgages, and something that we do at Barclays, not only in London, but in Monaco and Geneva as well, is mixed collateral lending.
Yeah.
So that is where you take charge over a property.
Yeah.
You also take charge over a client's financial assets, typically cash or investments or both.
Yeah.
And then your loan to value can be much more generous, because you are effectively using a liquid collateral that you are then able to attribute a lending value to. And of course, cash is highly liquid. Investments are pretty liquid as well, depending on their risk profile. And that allows clients a lot of options around liquidity. And we've certainly seen that become more popular in the kind of market that we're in at the moment, because for a number of reasons, whether somebody's working on the property and needs a little bit of collateral, or they don't need the collateral, but they'd like to just know that that liquidity is there if something comes along over the next few years. And of course, in the interest rate environment that we're in versus the sort of investment returns that are being seen, it's of course volatile, and there's perhaps an opportunity there as well.
Talking about interest rates, because you brought it up. Does Barclays have a view on where they think interest rates will go for the rest of 2025?
Yeah. So if we're talking about UK interest rates and the Bank of England, I think we're obviously at 4% now.
Yeah.
And when you look at the way that the vote went, it was pretty close. One MPC voter wanted a slightly deeper cut. 4 wanted there to be a remain. So I think all of that would probably suggest that we won't see another cut this year. Obviously, that's nobody can really know, but that would be the indication at the moment. I think that's also backed up by the inflation figures that are coming through. And if anybody spends any time reading the exchange of letters between the Chancellor and the Governor of the Bank of England over June, there was a prediction that the ONS data suggested an increase in inflation over the summer period, driven by a number of things, all of those publicly available, but energy prices, bit of food shopping, petrol, and a little bit of wage inflation, although that's come down a lot. All of that would suggest that will carry on until September, maybe October. So frankly, it's too early to say. But that doesn't leave a lot of time between now and the end of the year. So that feels like we're probably done for this year, in my opinion. Clearly, we don't know. Going into next year, I think for me and a number of other I guess high net worth ecosystem folks that I spend time with, at a recent event probably about 4 or 5 months ago, the rate of around 350 to 375 in terms of the Bank of England base rate will probably represent a bit of a tipping point, because that starts to drive credit markets, we think, in a way that have been slightly different to what we've seen. And that might be a turning point. I think psychologically 3% will be that next psychological hurdle. So that's the first thing. But it's slightly different for fixed rates. Fixed rates are not priced according to the Bank of England base rate. They're priced according to the market swap rates. And those have been over predicting a drop in the base rate off and on for the last 2-3 years. So we keep thinking it's coming, and then they go back up. Keep thinking it's coming, they go back up. And at the moment, we're seeing a slight coalescence of the 2-year swap and the 5-year swap, which hasn't happened for a number of years, and that's give or take about 3.7%. So that tells you the market sees the 2 and 5-year market at somewhere under 4% today.
Yeah.
The Bank of England base rate's 4%. So it would sort of feel like it's a good fixed rates are probably reasonable value at the moment versus trackers, but of course all of that has to be based on your own requirement around the risk that you want to take around the volatility of rates.
Barclays has recently put together a buying agent panel, which I'm delighted to say BlackBrick is on, and I for one am immensely grateful, when banks really see the value in what we do, so much so that they take the effort and time to put together a curated, vetted panel of firms to work with. I wanted to ask you how important you personally feel that buying agents are in the process, and why you think it's important for private banks to work closely with buying agents.
Okay, so first thing I'd say is it's less of a panel and more of a guide. So it was clear that many of our internal folks had connectivity to the marketplace, including yourself, for many, many years. And I thought it was important to be able to consistently represent the work that is done in a way that was easy to digest, number one. Number two, I think you're absolutely right. It's obviously hard to get the statistics on this, but at least 50%, if not more, of the transactions taking place are through buying agents or other connectors or fixers in the market.
Yeah.
And that is really compelling as a number or as a percentage. And I think if it's greater than that, then it's even more compelling. So I think it's really important, especially on the basis that we're based here, that we should allow our clients to have access to that. And that feels like a sort of add value piece. But of course, there's a risk associated with not doing that, which is, of course, that it may take longer for their journey. It may mean that they don't get the best access. It might mean that we're doing them a disservice. So I think all of those things are important. I also think it's clear that best in class is really important at the moment. And maybe I might ask you the question back, but I'd like, I think it's hard to find everything you want in a busy market.
Yeah.
In this market, I imagine it's even harder.
Yeah.
Because most of those properties aren't even on the market. And so you're making a market effectively.
Yeah.
And for me, when I think about the compromises that clients may then have to make, compromises which are either related to time pressure or compromises that are related to, well, we didn't really get what we wanted. And now 2, 3, 4 years on, we're going to move, and I've seen those case studies from time to time. So that's why I think it's really compelling at the moment.
Yeah. And I think the other big one, of course, is price. I think, a lot of clients mistakenly often think that the estate agent is working for them, as in the buyer. And therefore, they're going with their advice and recommendations on where they should pitch an offer. And I think another key way in which buying agents add a lot of value, also working with private banks, is on the negotiation side of things. Before we submit offers, all of the research that we do on the market, comparable sales, understanding the seller and their situation to then, put forward good offers, but also competitive offers, and ultimately try and save our clients as much money as we possibly can from the asking price. But I think having buying agents and buying agents working with private banks works really nicely on so many different levels. But from a negotiation perspective, I genuinely believe that with a buying agent involved, there's far less likelihood of the bank seeing a down valuation. If the buying agent has really done their job properly and negotiated that transaction well, then there shouldn't be any nasty surprises. And and nasty surprises are bad for business because often everybody gets upset and sometimes the deal falls out of bed. But if the deal's been negotiated properly from the very beginning, there's far less chance of that happening. And then everybody's happy. The client's happy, the bank's happy because they get to do the mortgage, and the deal gets done. So I think that's another important thing. But all the things you've said, obviously access off market, helping the client, giving a great service is really important as well.
And in terms of that off market, I'd love to hear more about how you make that come to life, because it's
really... Well, I can't possibly divulge all of our secrets on the podcast, Stephen. But I think off market, there's different interpretations of what off market actually means. There's genuine off market where we are direct to seller, and I would say that does happen, but it's quite rare. That will often happen where we've been targeting a specific property for a client and spoken directly to the owner. But then there's lots of off market where sellers will appoint an estate agent to represent them, but they don't want any marketing. They don't want any digital footprint. And that might be because of privacy and security reasons, but also in a market that's quite tricky and very slow. You don't want your property sat on a website and getting stale for the whole world to see that it hasn't sold for 6 months or a year or longer. Perhaps it's had a couple of price reductions. From a marketing perspective, that looks weak. So keeping things off market obviously protects that from a seller's perspective. So I think lots of people are choosing to sell off market at the moment because the market's pretty slow. But there's other reasons as well. And I think the higher the value chain you go up, above 10 million, around about 80% of what we buy for clients is not online. So it's quite a big percentage. What's your current thoughts on the state of the London property market at the moment? Do you think it's a good time for buyers?
Yeah, I think it's a really great question. I think it's too early to say at this point whether we'll be sat here in 10 years' time saying this was one of the best opportunities that existed in 40 years. But clearly, and our view and my opinion aligns broadly to the credible commentators' views out there, which is if you look at 2014, that was a real peak in prices. There's been a whole set of events, too many to list, that have brought us to where we are today. I think right at this moment, what you're seeing is, yes, some geopolitical stuff, yes, some stamp duty challenges, also interest rates as well. But you've got an asset class that remains desired globally. You've got a shortage of it yes, there's a bit more of a buyer's market right now, and probably buyers have got more choice now than they probably ever had. But in terms of those quality assets, I think that's really difficult to find. And of course, everybody wants quality assets. So that by definition creates shortage. So it's kind of a bit of a cycle. And I think that the fundamentals about not only London, but the UK, from everybody I talk to, from a client or key business introducer perspective, when I'm out on the road outside of the UK, continues to reinforce all the things that we've known for a very long time. Clearly, it's a bit of a spectrum, so that has waxed and waned. But when it comes to things like rule of law, education, political stability, it's tick, 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 tick. So, and I'm sure we'll get to it as part of our conversation, but that also, you can look at the UK and London in isolation, but actually you've got to take a much broader view globally.
Yeah, no, I think that's good advice. And we share a lot of those views as well. UK res non-doms, obviously this year has been dominated by changes to that and the abolishment of the historic UK res non-dom status. How's that impacted the bank? Has the banks actually seen, because there's conflicting reports on exactly how many UK res non-doms have left. And I think there's a lot of uncertainty there over figures. What have you seen on the ground at Barclays in terms of clients leaving and selling properties?
So, okay, I in my mind, three things. I think number one, you're absolutely right. The data is a bit inconsistent. So the numbers, I think the word exodus has perhaps been overstated. And whilst nobody's exactly sure in terms of the real numbers, and I think that will take years for anybody to get a handle on, 5 to 7% is the number that I'm seeing reported, or either the media reports, or that you might see. That doesn't sound like a big number to me, especially if you think of people coming into the UK. And certainly what I'm seeing, and I'm sure you are, is folks from the US coming to London, and column inches has been written about that, and all for really interesting reasons. It's great. Mainland Europeans, people from France, Italy. I've not only am I seeing those, I'm meeting those, talking to them about the market. But also the Middle East and Asia, seeing the opportunity that exists at the moment as well. So there's always two halves to every story. So I think that's really important. I think secondly, people that are leaving are not necessarily selling their property, and I don't think that's even up for debate. That's a fact. There is maybe right sizing or better sizing. But all of that is a bit of a broad mix as well, because you may need the property for something else in the future. There's children at university. I'm seeing those, and we need to keep the property, or there's something else that's compelling. And then lastly, we globally, last year, 2024, was a big year for elections. Something like 80 to 85 presidential or general elections took place. As a result, there is political upheaval everywhere. And so as those sands all shift, there's any number of combination of events that will be compelling for the London property market. And I think that's a reason to be optimistic. And when you look at the new rules, people are still getting their heads around that. And actually there's opportunity that exists as part of that as well.
Interesting. Obviously, we've got the autumn budget, and we won't go there because I think there's just lots of rumours in the market at the moment. Nobody really knows. But...
I think you're right. Wrong to speculate. But what that probably does mean is that there's a short window of time, which by the time everybody's back from the summer will probably be about 6 weeks, where people will probably just sit on their hands a little bit. But whenever those things happen, I always remind folks, and I know you do the same, which is, it doesn't stop you from having a conversation. It doesn't stop you from understanding what might be your combination of choices that you will have. And of those choices, the things that you need to do to make those things happen. It might be thinking about a valuation. It might be thinking about checking out a different location. It might be having a conversation with an agent about actually what's available in the market at the moment, because that might mean something that perhaps isn't available normally and might make you transact a bit quicker. I don't know. But these are the conversations that should happen rather than waiting when everybody else starts having those same conversations.
And for clients that are borrowing at the moment, where are you seeing most interest? Are there sort of particular hotspots where you're seeing clients really focus in on at the moment?
Okay. Great question. I love that question. Because we're such a broad business in terms of where people are from, what they're looking for, and where they're based, and what that tends to mean we see everything. So I'm, as I keep my ears open at the desk, I'm hearing lock up and leaves in London, and that is service departments with all the bells and whistles that comes with, luxury concierge, jacuzzi, pool, gym, all of that sort of stuff, so that I can live in an insular bubble almost when I'm in London, and then I can just do what I need to and focus. Great. Wide houses, really wide houses in North London, Northwest London, where there's the ability to have privacy. There's the ability to future change the footprint of the property. And of course, there's the ability to entertain. Gated communities. We definitely saw an uptick in popularity of that through COVID. And when you look at places like St George's Hill and you look at Virginia Water, all of those have done very well when you look at the underlying data, and there's a reason for that. People are looking for that type of security and that isolation, but also feeling like they've got a really big house and a really big garden. So we're seeing a little bit of everything, and that may also include investment opportunities. So flats in Mayfair at the moment. Clearly there's an opportunity there. I mean, you talked about that years and years ago during COVID around the discount that was available. When you overlaid at the time what was the dollar advantage, you know, it was
38%, I think.
It was an incredible opportunity. So there's some of that also.
Obviously, interest rate. We've spoken about interest rates and Bank of England rates at 4%, and it's a bit sticky and might stay stuck there for a while. If you're speaking to a client and they are unsure about whether they should buy in cash or borrow, what advice are you giving clients at the moment?
Okay, so the first thing is make sure you've got your team around you and make sure you've had those conversations. So typically that involves a tax specialist and a lawyer. As well as the bank and perhaps your own internal advisors. It's really important those conversations happen because that will, and in most times these things aren't binary. There tends to be a number of options, and each of those options has a sort of spectrum of thinking that needs to go in. Which means you can kind of rule some options out and you need to think about and debate others, and then you need to land at a decision. All of that takes time. And it's important that people go through that process because, of course, your opinion changes as the external factors out there change. But, of course, you have time to reflect. I think what can be problematic is when those decisions are made either in isolation or very quickly. And typically that's driven because the property is there. It needs to be transacted immediately. There's other buyers, and all of that emotional roller coaster of activity starts. And so that means you've got to transact quickly, which means transacting in cash because everybody else is transacting in cash, or at least you think they are because that's what you're being told. And then all of a sudden, a lot of those decisions that probably would have been worth thinking about, that may have changed the course of the transaction, can no longer be undone. And it off you go. So I think it's quite rare that I see anything that is truly problematic, but I have heard stories from industry colleagues about somebody not knowing about stamp duty, even as a concept, and therefore when they got to the end of the transactions are like, wow, okay, I didn't realise I had to do this. Or with high net worth lending, and the high net worth mortgage rules are they're very specific. But they also are quite flexible. And when you create income, you use assets to do that. So it's really important those assets are fairly liquid. But if you've committed those to the transaction, they're no longer available to be able to underwrite. And that can be problematic. And a lot of clients high net worth individuals may not know that going into the transaction. And therefore, when they need that liquidity, especially when interest rates are much higher, because interest rates guide the stress rates that you use, all of a sudden you're saying, well, you're not going to be able to get all of that out. Now, fortunately, we're very good at having those conversations very early, and that means that decision can be made, or even just acknowledge, yes, I've got the assets in the background somewhere else, or by that time this liquidity event will have happened and I'll be able to. But all of those conversations need to happen before the day of exchange.
So have the conversations early and get proper advice.
Get your specialist team.
Which route is right for you. Are there any common mistakes that you see buyers or advisors working with buyers make when trying to arrange a mortgage?
Honestly, no. But in terms of real problems, but I think that's because we sit down with clients and talk them through the process. And without going on about it too much, but the fact that we are seasoned in the market, whichever market we're working in, and we are able to transact locally, that means that we know all of those nuances. So we can ask clients, does this property come with a parking space? Oh, I'm told it does. Okay, have you actually asked that it's part of the deal, or that it's something you're going to have to pay for after, or maybe it's something that you've got to rent as part of the contract? Oh, I'm not really sure. Okay, well, that's okay. Do you want me to have that conversation, or do you want to go directly? And that's one example, and I've seen that a few times, because obviously parking spaces in London are a really important thing to think about. So the fact that we're able to preempt a lot of those means that we can work with our clients to flush a lot of that out before they transact. And of course, it's not just our responsibility to do that. It's the assembled team that the client has around them. So, touch wood, I think we've been in. I've not seen anything truly problematic, but more of that. So, if you're not from the UK, the England and Wales buying process, I think, can be quite a mystery.
Yes.
And having somebody who understands that and is able to explain that throughout that value chain is really important.
Yeah.
So when things come up like lease queries or an issue around service charge or something else about easements, then you're able to say, well, look, this is quite common because property in the UK, it's quite old property. So some of this dates back many, many, many years. So let's talk you through what that means. Speak to your solicitor. We can join that conversation and then we can tell you whether it does or doesn't affect the journey that we're on at the moment.
It's the power of working with the right team.
Yeah, absolutely.
Okay, so we're almost at the end of the podcast. It's flown by. I'd love to finish just with a fun, quick fire round, Stephen. So here we go. Prime central London or countryside estate?
Okay, I think the thought of a countryside estate is really exciting, isn't it? But I know what's involved in that in terms of almost a full-time job, maybe even more than a full-time job. So I'd go prime central London every day.
Fantastic. Cash or finance?
Finance. And I know you said quick fire and I'm giving you a slightly longer answer. You won't mind. But as a credit person, inflation actually is quite interesting. And if you think about the mortgage that your grandparents had, your parents had, even the first mortgage you had, you think about the relative value of that mortgage versus the relative value of that today, the impact of inflation on debt is not something people talk about much. But in a slightly higher inflationary environment, which we've been in, even though it's been relatively short-lived, you can see the power of debt versus the relative value of property and goods and services. So it's quite an interesting factor, but you have to think about it in the long term.
Fix or float?
Well, with us, you don't need to make that decision. We do a little bit of both. So we're able to give our clients both of those options in one single transaction. So I think that's really important. If I had to choose one, probably fixed.
Buying agent or estate agent?
Really unfair question, but given I'm here talking to you, I'm going to have to say buying agent, Anna.
One luxury that you can't live without?
I think it's my golf clubs. They've lived in the back of my car the whole summer. Probably shouldn't say, but yeah.
And if you could buy your dream property anywhere in the world, where would it be? Okay,
so I don't think I can answer that in one question, or one answer. So I'll give you a few and then, maybe we'll talk about it later. I'm really excited by the Mariterra apartments in Monaco. I think they're fantastic.
You'd be billionaire territory there.
Incredible, great views over the sea, great views of Turn 8 at the F1 track. I think that's amazing, and I think that redefines land reclamation, luxury living globally. I think the second one would probably be one of the terraced, the terrace muses or something like that. Maybe Wilton Terrace, private garden. That would be great, and then Wentworth Estate.
Good choices. Stephen, thank you very much.
Thank you, Camilla.
That brings us to the end of this month's episode of Finding Perfect Property, Diary of a Buying Agent. Thank you so much, Stephen Moroukian from Barclays Private Bank, for joining us on the podcast and sharing your expert insights on the London real estate market and financing property, and how Barclays Private Bank can help clients who are looking to finance their dream property. Please join us again soon for more expertise from across the UK real estate market. For more information on how to purchase in prime central London, please get in touch via our website, and don't forget to like and subscribe to the podcast on whichever podcast channel you use. See you next time.